Hello, today the topic is the top 3 dangers when dealing with an IRS revenue officer. Make sure you stay to the end because I'm going to talk about the most critical, the third one. Hello, my name is Tony Ramos. I'm a tax resolution attorney and I help small business owners who owe a substantial amount of taxes to the IRS get the best resolution possible. First of all, the revenue officer. This is a person at the IRS who has the most powers to collect taxes. They are not like the representatives you get when you call the IRS at automated collections. Those people are not as experienced and they're not as aggressive. But revenue officers is the most powerful, most experienced officer who's going to collect taxes, especially for small business owners that owe a lot of back taxes. So let's get to the top 3 dangers. The first one is not responding to a revenue officer. Revenue officers have the right, and they often do, visit your business or your home. It can be embarrassing to you, but they have the right to do that. And if they don't find you at the business, they can go to your home. If you're not there, they'll leave you a business card. And if you don't respond to them, you may be passing up deadlines, especially if you've moved, haven't had tax returns filed for a while, so that you're not getting the appropriate notices. This is your last chance to respond before severe consequences can happen. So do not disrespect, respond to revenue officers. It's time for you to face the music. The second of the top 3 dangers is taking them too lightly. You might think that you'll get back to the revenue officer later, but you have to first focus on your business, and you don't understand the seriousness when a revenue officer is concerned. I've already spoken about missing deadlines. They give you deadlines to comply. For example, they want financial information, fill out forms, bank statements, receipts, etc. And they give you deadlines. If you miss a deadline, that notice will say, we have the right to levy your bank account, among other things, seize property. And if you miss a deadline, that can happen to you. Another way you take them lightly is to treat them like they're a business. The number one question I have from my clients is, can we reduce what I owe? And oftentimes they ask me, just offer them 50 cents on the dollar. Well, these revenue officers can't do that. It's not their money. They're bound by the law and by the Internal Revenue Manual, and they cannot be treated like a business person. So do not take them lightly. Understand also that they have to account for their actions to their supervisors. So recognize that fact. And then lastly, the biggest danger is that under the certain circumstances, you could end up being charged with criminal offenses for what you've done. Some taxpayers who run businesses think that they can play games with the IRS, they can hide assets, hide income, and try to outsmart revenue officers. One particular area that's very dangerous, there's a civil statute and a criminal statute on employment taxes that you withhold from your employees. If you don't turn those over to the IRS, usually it's a civil charge, but sometimes if it gets serious enough, you can end up with a criminal case. Let me give you an example of a case that I had. I had somebody who was levied a substantial amount of money from the IRS, over $100,000. So what they did is they closed that bank account, moved banks, stopped communicating with the revenue officer, thinking that they could outsmart the revenue officer. Well, the last thing that he wanted to happen was that he was then charged with a criminal case. So do not take revenue officers lightly. You need to respond to them. And most importantly, recognize that you can get in serious trouble, even a criminal referral, under certain circumstances. So if this is something that interests you and you would like a free case analysis from me, check the link below. You can get hold of me. I think I can help you. Thank you.